Today we're going to explore the stock to real estate valuation and take a look at how it's fluctuated in the past, going back through 100 years of data. And we're going to look at what happened with that recent correction, crash, whatever you want to call it, in the month of April, and kind of see where we stand right now. If you're unaware, stocks and real estate do go through fluctuations where one outperforms the other, and typically during a recession, you'll see that real estate will always outperform stocks, even if both of them are crashing. And even during the financial crisis in 2008, that was brought on by real estate and bad mortgages. If you like this video, subscribe for more, and let's dive straight into the data. Okay, so as you can see, this is the stock to real estate ratio, or the S&P 500 index, divided by the Case-Shiller home price index. And if you look back through history, going all the way back to the Great Depression in 1929, stocks do go through phases where they significantly outperform real estate, and then inevitably there is a crash back to the mean, back to the area where real estate is actually significantly outperforming stocks. And even during this very high inflationary period we had during the 70s and 80s, it went through another time frame, another decade, 2 decades, where stocks significantly outperformed real estate. And then they had a correction. Stocks dropped significantly more than home prices did, or home prices went up while stocks were going down. And this was during the period of time where you had 15, 17, 18% inflation, and mortgage rates went all the way to 15%, sometimes even 18% in some cases. So even during high inflationary, high interest rate environments, real estate outperformed the stock market. And then we had this big lead up to the dot-com bubble. We're going to zoom into this section over here in just a minute. But during this huge rise in stock values brought on by the tech bubble in 1999, and when it peaked in 2000, you can see stocks significantly outperformed real estate by a huge factor. And this was when stocks were at their most overvalued valuations in history, really, going all the way back to 1999, where you had the Cisco bubble, and it was like 99% of companies in this era failed when the internet was coming around, and every company with a .com behind it was performing incredibly. And that all came to a halt when the tech bubble happened and stocks crashed 85-90%. That was for the overall index. So then you had let's zoom in on this a second here. So this was the dot-com bubble right here, and then you had the financial crisis. And even during this period of time, it was sort of just bouncing around neutrality, where a couple years you had stocks do better, and then a couple years real estate did better, and then a couple years stocks did better. And then the financial crisis happened. And that was when people were buying homes they couldn't afford, bad mortgages. You didn't even have to make money. You didn't even have to show income to qualify to buy a house. There's a couple famous movies behind it. Highly recommend you go watch them. Very interesting watch. But even as home values cratered, it was basically buy one, get one free in most of the country. You had stocks underperform real estate. So stocks crashed significantly more than home values did. And that was a recession brought on by real estate. So fast forward to where we are now, stocks have essentially been outperforming real estate since 2009. And we could be entering a scenario here where stocks are going to underperform real estate for the near future, potentially the next decade or two. And even during this recent April crash, I'll zoom in on it here, even during this recent April crash that we had, where stocks dropped 20% in a week or 2 weeks, you can see it sort of reverted back to a lower valuation, but still stocks are so overvalued relative to real estate. And you can see it's rebounded pretty quickly, as stocks are almost back to their all-time highs at the time I'm making this video. But I think the dot-com bubble is kind of an interesting comparison to where we are right now, because stocks are still very, very overvalued relative to how much money they're making. And I think we potentially see a scenario where, and I'm not talking about a stock market crash or a housing market crash, But if we go in through a few years where stocks don't really do anything, potentially a couple negative years, because remember, stocks are up 150% in 6 years. This is not normal. We are seeing some years where stocks are going up 15, 20, 24% in just a year, and that is very, very abnormal. A lot of new investors are saying, wow, if I just put my money in the stock market, I'll make 20% a year. And that doesn't happen. On average, stocks will go up 7 to 10% a year. So I wouldn't be surprised if we have 2, 3, maybe 4 years of down returns in the stock market, and then you have real estate outperforming. Even if real estate is neutral year over year and stocks go down, you'll see this line, you'll see this trend declining. I think it would make perfect sense to me if we even came back down to here, or maybe even down to this 5 zone where stocks are 5x the value of real estate as a whole. So I don't know what exactly could cause this. I mean, we are seeing some shakiness in the economy, so to say. I mean, we have the debt bubble that is at all-time highs, essentially. We're seeing a lot of bankruptcies happening in the private equity sector. There's a huge issue with student loan debt that is happening right now. People are essentially having their wages garnished in order to mandatorily pay for their student loans. And all of this affects the ability for people to invest, and more often than not could lead to people selling their retirement accounts in order to just continue their daily living expenses. Now, real estate, on the other hand, you're seeing some parts of the country where inventory is skyrocketing. It's higher than it is than pre-COVID, pre-pandemic crash. Places like Texas and Florida, real estate is skyrocketing, and they're having a lot of issues there with inventory. Prices are getting slashed every single month. But then you look at places like California, which we're still low inventory in a lot of counties. Yes, you have some areas that have already crashed, places like San Francisco. LA hasn't really done too much the last few years, but you have other counties in Southern California that are outperforming most of the country. So when it comes to the overall trend and the stock market to real estate valuation, in my opinion, real estate is a significantly better buy for the long term compared to stocks. Now, I know there's a lot of people who invest in the stock market and eventually use that money as a down payment to buy a house or buy an investment property. And I think that is a great option right now. When you look at these valuations, I mean, just a couple months ago, we were at all-time highs for the stock to real estate valuation. So I don't really see how this continues to go up, especially when you look back in the dot-com bubble where stocks were the most overvalued in history. And you're telling me right now that stocks are more overvalued compared to real estate back in 1999 and 2000, when stocks were the most overvalued in history and we had an 85% crash. You're telling me right now that stocks are a good buy relative to real estate for the long term. In my opinion, I don't see that being the case. Now, I know home values are expensive. Home unaffordability is an issue right now. But if you're looking to park your money and maintain your wealth, if a recession happens, if a crash happens, real estate is a significantly better buy compared to stocks at these valuations. Now, that is my opinion, but obviously do with this information what you will. I just wanted to do an update on what's happening with stocks compared to real estate, and we are still so overvalued. Remember, even going back to 2022, stocks had a 30% crash and real estate had around a 15% correction. And look at this valuation plummet. So we'll have to see how everything plays out in the economy. Obviously, there's a ton of unknowns going on right now, but let me know your thoughts in the comments. If you like this video, subscribe for more, and I'll see you next time.